Hello viewers, welcome to my channel, Sensor 360 Investor. In this video, I'm going to do an update on where we are with the markets. So within our 360-degree framework, this video is going to focus in on the markets segment. So before we begin, a quick word about the disclaimer. Please pause, read through this, and then continue. Thank you. Okay, so without much further ado, topic is markets. And I'm going to just bring this up. I'm going to keep this front and center for a little bit, but we won't go through it since this was covered a couple of videos ago. Okay, today we're going to take a look at breadth as well and introduce breadth. And one of the indicators that I'm going to bring it to the discussion, actually two of them, is the Buffett indicator. So traditionally, these are the values on the Buffett indicator that indicate whether the markets are undervalued, fairly valued, or overvalued. The problem with these is that the market could stay at these levels for very prolonged periods, which kind of makes this indicator not a kind of a timely indicator. So you could be overvalued for a long time, and percentages say well above 115. So this table, although it's the original guideline, not as helpful as before. Another way to look at it is to take a 10-year average of where the indicator's been, and then so the average 10-year Buffett indicator is 161. Then we can compare today's readings to that to say, are we relatively overvalued or undervalued? So this is a little bit more helpful. And going one step further, we can use standard deviations and plot the market and how we're doing. And this one's a little bit more helpful because we can see as the markets gyrate up and down, the standard deviation levels give a much better visualization of overvaluation and undervaluation. So we can see here in 2000 dot-com bust, where the overvaluation we can see here just recently well overvalued here, and we've had a correction since then. Then if we go back to the 60s, we can see 60s and early 70s where we were. And then it's on the flip side, like here's the great financial reset recession where we got well undervalued. So it looks like undervalued. And then here is an example of where it can be pretty prolonged. So even though we got undervalued here, the market was undervalued for a long time, which obviously gave a long buying window. So the peaks are a little bit more peak shaped, and we have like a valley, a trough here, but it's a sustained period of low um, undervalued through this session here. So it's not the best tool. It does give some kind of bigger, broader picture on the macro level, and no indicator by itself is going to kind of give the game away. So, but this one is fairly useful. And then from Morningstar, they have they map the fair value of the stocks and then come up with whether the markets are overvalued or undervalued. And so we can see as of October, when the markets are considered undervalued, and they're the most undervalued since July, earlier in the year. So again, indicating that there's an opportunity to get into the market. So we're off the overvaluation of Buffett's, although we are still overvalued on a traditional basis. According to this one's a bit more timely because it looks at the individual stocks and rolls it up. So according to this, so that means that if we do get a follow-through day, which we did on Friday, then it's probably worth looking at. So let's do that next. Let's take a look at where we are in the markets. Okay, so let's take a look at the Nasdaq. As of the taping of this video, which is Monday morning, so this is Monday. So let me take down 12th the picture, and so this is where we were as of Friday. Friday was a huge up day, and so that was our follow-through day at the end of the day. So just working our way back, we can see that um, tr traditionally this would be our day one. That's our first up day after establishing a low point, although the prior day is considered like a pink rally day. So let's put the low down here and mark that as the low. So any undercut of this will reset the rally attempt. And so if we just go off this basis, there was a little undercut here off from here. So technically, if you're just following that methodology, then you would use that to reset. But there's a tendency to be more optimistic. So I think that this is the low that's going to use. So that'll give us day one, day two, day three, day four, day five, day six, day seven would be, yeah. And so, which was Thursday, and then obviously we had the follow through day on Friday. So the levels to watch now would be certainly the low here and the low here. So if we look at today's action, which is Monday morning, we see ourselves gapping down. For some reason, it doesn't want to stick over there, but okay. There we go. So we see ourselves, we actually gap down, but this is because of the news from overseas with the what's happening out in West Asia, Middle East. And however, it looks like we are moving off the opening gap period now from the low side, we're starting to work our way back up. So key thing to watch today is if this becomes a distribution day. So if it does, then that doesn't holler too well for this rally, because typically if you get distribution within the first days, 3 days, then there's a high probability that the up attempt will fizzle out, and then we'll be looking for another fourth day again. But that's where we are. So that's what to watch out for today, is whether we how we fare, and is it just a down day or ends up being a distribution day. So we won't know that until the market closes, when we get seeing on the volume. But that's what to watch out for. So based on IBD, we are in a confirmed uptrend. But now let's take that, peel the onion one layer back and take a look at today's action to see what we can possibly anticipate. Okay, so that's a quick look at the markets and where we are. So we are in a reconfirmed uptrend, although the first day is looking a bit challenging. So this is where you're now looking to get back into the market. Hopefully you're working on your watch list. So I'd shared several videos on building that out over the last week or so. Hopefully there were some selections in there that you could review, research, and consider for building out in positions as this market reveals its end in the coming days. So that's a wrap for this video. Thanks for watching. Thanks for listening. If you're not a subscriber, please do consider subscribing. I will see you in the next video. Goodbye.